If you've ever been told that you need 2 years of tax returns, perfect financials, and a stack of paperwork just to get approved for business funding, look, I'm here to tell you today that's not always true. So in this video, I'm going to break down exactly how that's possible, what that strategy looks like, who qualifies, and what you need to have in order before you even think about applying. All right, so let's get into it. If you've ever been told that you need 2 years of tax returns to get funded, that's not a lie. That's just the traditional way of getting funded. We're talking about SBA loans, conventional bank loans. Yeah, you're gonna need tax returns for all those. But here's the trap that most business owners fall into. If you're writing off expenses the right way, your tax returns are gonna make you look broke, even when you're really not. And the bank doesn't care what you actually make in the year. They only care what's written down in your tax docs. So now let me clarify. We're not talking about traditional bank loans. We're talking about business credit cards that have introductory 0% interest offers that last anywhere between 9 and 18 months. That means you're deploying real capital in your business. We're talking about rehabs, down payments, paying contractors, investing in your business and not paying any type of interest while that introductory window period is open. And the reason why this works without tax returns, because with 0% interest business credit cards, they're looking at your credit profile and how your business is set up. They're not looking at your tax return. That's the key difference. But honestly, it doesn't work for everybody. So let me tell you exactly what you need to do and what your profile needs to look like in order for you to be able to benefit from this. Here's generally what you need. None of this works if your business is not set up the right way first. And I'm not talking about setting up an LLC and calling it a day. I'm talking about setting up your business entity, structuring it the right way so that when a bank or a lender looks at your profile, they're gonna see a real business, real legitimate business that deserves capital. And this is where most people mess up, because most investors I talk to have been in business for years, but they don't have this set up properly. And because of that, it's quietly costing them approval. So let me walk you through exactly what needs to be in place. Step 1, setting up a business address. So now everything with the address when it comes to business funding is by far the most misunderstood aspect of getting approved. So early on back in 2020, 2021, everybody said, look, don't put your home address. You wanna use iPostal, Opus virtual offices, all those random places that are not great for your profile. Back in 2020, 2021, all the gurus said, do not put your home address. You want to get a virtual address for your business. Now I'm telling you today that based on experience, based on all my clients, based on getting denied using iPostal, Opus virtual offices, or any other of those popular virtual offices that everybody talks about and getting denied, that is not true. I've had clients who get approved for over $100,000 in funding using their home address, and I've had clients who use iPostal who get denied simply because they are using iPostal. In 2026 and beyond, we have to get past the mindset of what everybody was teaching in 2022. The first thing is that it's perfectly fine to have a home address. The myth was that banks often saw businesses that had home addresses as high risk. But look, there's multi-million-dollar businesses that are based at home. So are you telling me because they're based at home, they are not qualified for funding? That doesn't make any sense. But what I tell you is that getting a P.O. box can get you denied, because most lenders don't even see that as a legitimate business address. It's just a place where you accept mail. But now let's just say that you don't want to use your home address, you want to use a virtual address like everybody says. Years ago, getting approved for funding using a virtual address, especially at those popular ones, yeah, that may have worked. But years later, banks have been able to see a strong trend of people scamming, people trying to get over to banks and lenders, and they've all been able to track them back to all these addresses at popular virtual address sites like iPostal, like Regis, like Opus virtual offices. And now because of that, when you put a business address on the application, even if you're just opening up a business bank account, what they're going to do is actually Google search that address and see, is this a real business address? Does it belong to a commercial building? Or is this one of those virtual addresses where it can raise red flags and where we think that person could be a scammer. I've seen applications get denied on the spot because a lot of these virtual addresses that people are promoting, they're basically PO boxes in disguise. I'm not saying virtual addresses are bad altogether and you can't get approved at all, but instead of going to the main ones, we're talking about the Regis's, iPostals, what I would do is go to Google and search your virtual addresses in your local city and find a non-popular one, find the mom and pop ones that actually have an office where you're able to walk in and do work at whenever you need to, and use that address for your applications if you don't want to use your home address. Step 2, form your LLC the right way. Forming your LLC is the foundation for everything. Skipping that, you're capping how much funding you can actually get approved for. See, most investors and business owners, they may already have an LLC, but the way it's structured is the reason why they're not getting approved. Watch your business name carefully. There's certain words in a business name that can automatically raise red flags and cause an automatic denial or getting approved for small limit. Because these certain words in the name signify high risk. And these banks, especially traditional ones, are not open to making a lot of high risk decisions. Words like investments, real estate, construction, properties, credit, partners. These are all different words in the business name that can raise red flags and cause an automatic denial. Even before a human even reviews an application. Keep your business name clean, keep it neutral, professional, general. Use names that are not going to raise red flags when you do go apply for this funding. And look, I understand because you want your name to look sexy, you can always create a DBA later. But when it comes to setting up your LLC, let's make sure that it's safe and it's not going to raise red flags. Once your name is locked in with the state, you can go to the Secretary of State website for your specific state. For example, if you lived in California, you can Google California Secretary of State and it's going to take you to the Secretary of State website. Once you're on the website, it's going to give you an option to register a new business. You go through that application process. I promise you it's super simple and super fast. A lot of times it's going to take at most 15 minutes. Also in that process, you can get a registered agent by simply typing in California registered agent. You're going to get it for super cheap, something like $25, $50 a year. And now you want to get this done early and you want to get it done right because the age of your business is going to be solely dependent upon when you first filed your LLC. So if you can, start doing it now because the older your business is seen with the bank, the more you are qualified to get approved for. There's even certain products you can't even get approved for unless your business is 2 years old. So you might as well just start now. Step 3, get your EIN from the IRS. The EIN is basically the social security number for your business. And you're going to need this number for almost any type of application, anything that regards your business. You're going to need that EIN. This includes opening a business bank account, applying for credit, applying for grants. Anything that regards your business, they're going to be asking for your EIN at one point in the application. And look, promise me that you do not pay someone to create that EIN for you. You can literally get it for free off the irs.gov website. But look, I need you to pay attention to this because this is so important. When you set up your EIN, you want to make sure that your name and your address on your LLC registration and your EIN match up perfectly. Because if you have mismatched information, it's so easy for a bank to deny you because they simply can't verify your business. Step 4, open up a business bank account. This step is massive. Look, I'm even gonna say, if you're serious about getting funded, you can't skip this. Years ago, I had a trucking client come to me. He was making about $30,000, $40,000 a month, and he was looking to be able to get funding so he could be able to buy more trucks for his fleet. And I said, okay, cool, man. So you have the tax docs, right? You have the paperwork to be able to show you have your business bank account statements. He was like, yeah, I'll just go ahead and get my bank statements from my personal account. And he said, yeah, I could easily get that. And I'm like, okay, it is from a business bank account, right? Because that's the only way you're gonna get approved. And he was like, nah, I never opened up a business bank account. I just ran all my money through the personal account. And I was like, oh man. And I wanted to stress this, and I don't know another way to be able to do it, but you cannot get approved for business funding if you do not have a business bank account. I don't care how strong your personal credit is. You need to open up a legitimate business bank account. There's too many options out there for you not to be opening one and running a business and having all the revenue run through your personal account. In the eyes of a lender, they don't even see that your business is a real business. They see it as a hobby. And banks don't approve hobby. Also, on top of that, just for best practices, you want to separate your personal finances from your business finances. So if you run your business income through your personal, you're just commingling everything. And that's messy, and lenders don't want to approve people on that. Also, on top of that, once you open up a business bank account, you want to make sure that you have balances in there, making sure that you have a few $1,000s at minimum, and making sure that you have consistent transactions. By having a strong balance and consistent transactions, it's gonna make the banker feel good. And now they know that this business is actually in process and is actually making money, and it's not just a shell company that's not producing any income. Step 5, know your industry code. So now this is something that most people don't even think about because they don't even know what it is. It's called your NAICS code. It's the North American Industry Classification System code. It's basically a 6-digit code that categorizes what your business does. And lenders love to use that to determine how risky your business is. So by using the wrong NAICS code, not knowing that it's gonna raise red flags and cause high risk signs with the lender, you're literally kicking yourself in the ass. It's very similar to our business name. If it raises red flags by a certain name or using the wrong NAICS code, it can give you an automatic denial every single time. So here's the rule of thumb. If there's any type of NAICS code that signifies a business that has ups and downs, it's seasonal, or they have a strong potential of making a lot of money, but also a strong potential of losing a lot of money, those are going to be considered high risk. Now the NAICS codes that relate to B2B businesses or professional services, those are the ones going to be the less risky. And unfortunately, a lot of banks automatically deny all real estate investors. And we all know real estate investing encompasses a lot of different things, right? It's not just one thing. It's a lot of different services, a lot of different skills. And that's what we want to highlight when it comes to applying for funding, especially as a real estate investor. Services like interior design or project management are great to be able to put on an application instead of outright saying real estate investing and risking automatic denial. And now let me be clear. You don't want to misrepresent what your business actually does, but you do not want to use a high-risk NAICS code that will cause an automatic denial when you do not have to. So now that you got your business set up properly, let's talk about the other side of the equation. That's your personal credit. Even though we're talking about business credit and business funding, the real foundation of your approvals is still going to go back to your personal credit, especially for the 0% interest business credit cards that we're already talking about. 70 to 80% of the decision of whether you get approved or denied is going to go back to how strong your personal credit profile is. Ideally, you do not want to have any late payments within the last 2 years. Keeping your credit utilization not only under 30%, but keeping it under 10%. Keeping it under 30%, yeah, it can't hurt you, but it's also not going to help you. So it's ideal to keep it as low as possible. You want to have 7 to 10 open primary accounts. Those are accounts that are in your name. We're not talking about authorized user credit cards. We're talking about cards that you had to use your social security number and put your own name down to be able to get approved. You also want to have at least 3 personal credit cards that have at least a $5,000 credit limit. And now look, if you want to get saucy, you also want to have 1 personal credit card that has at least a $10,000 limit from one of the big tier 1 banks. We're talking about Chase, Wells Fargo, Bank of America. But really you want to have over $15,000 in the total available credit. But also we hate them, but also inquiries. We don't want to have more than 3 hard inquiries per credit reporting agency. So if you check all those boxes, you're going to be in pretty good shape to get approved for a 0% interest business credit. But look, if your credit isn't quite there, you gotta always tell people this: your current situation is not your final destination. Anything on a credit report could always be reversed or deleted. If you have negative accounts, you could always go through a credit repair process or use an AI model like ChatGPT or Claude to create dispute letters on your behalf. All right, so now your business is set up properly. You got the right credit report. Now we're at a point what everybody wants to hear: the actual funding phase. Every new hard inquiry that you get drops your score anywhere between 2 to 5 points. And now with every new hard inquiry, you're just making it harder for you for the next application. So that's why it's so important to be able to make sure that you have the right sequence and order before you start applying. So you're able to maximize how much you're going to get approved for while also minimizing your hard inquiries. So here's an example of a planned funding sequence. You apply to your Experian lenders first, and then you go to your TransUnion lenders, then you go to your Equifax lenders. And you have to know which lender pulls which bureau, so you're not stacking inquiries on top of each other one after one after one. For example, if you already have a whole bunch of inquiries on TransUnion and Equifax, you don't want to go to a lender that also pulls TransUnion and Equifax. You want to find a lender that only pulls Experian, because they're only going to look at your Experian credit report. And also the order matters beyond the bureaus and inquiry. Each approval that you get is going to strengthen the next application that you apply for. Because when that next lender sees your previous higher approvals, it's going to signify your credit worthiness. Because when that second lender sees their previous approval, they're going to be like, okay, well, look, this applicant, he seems like he can be trusted. I mean, Bank of America already approved him, or Chase approved him for $20,000, $30,000, $40,000. If they trust him, I could probably bottom off a little bit. And look, that's how banks think. And that's what stacking means. You're not just getting one approval. You're building a portfolio of approvals, each one building on top of each other and making the next one easier. And look, when you execute this appropriately, the numbers add up fast. So once you get approved, this is where strategy starts to make sense, because now you're able to use the funding that you got approved for to be able to fund your real estate deals or to be able to invest in your business for it to grow. So now for my fix and flippers, most contractors, they're not going to accept credit card payments. So you might be thinking, well, business credit cards are not going to do anything for me. Yes, that is true. Most contractors are not going to accept credit card payments, but a way to get around that is by using different services like Melio. This platform allows you to pay vendors via wire or ACH, even if you're using a business credit card. So your vendor gets paid cash and your card gets charged just like a regular purchase. So yes, it's a way to be able to liquidate your card. Yes, there is going to be a transaction fee to be able to go through this process, which is typically going to be around 3%. But if you use a 0% interest business credit card where you're not getting charged any type of interest between 9 and 18 months, that's going to be a lot cheaper than using a typical business loan or a business line of credit. But let's just say that you're not trying to pay a vendor and you just want to be able to have cash from your credit card. You could do that as well. There are companies out there called liquidation companies where that's all they do. They're going to liquidate the cash out of your card. And yes, the transaction fee is going to be a little bit higher. So it might be anywhere between 6 and 8%, but you're going to be able to have that cash in hand. And that could be anywhere between 4 days and 2 weeks. And this is still better than most unsecured loans, which can carry interest rates anywhere between 10 and 20%. So even if there is a fee, you're still going to be saving money by using a 0% interest card and liquidating it. But of course, don't blindly listen to a random guy on YouTube. Make sure the numbers work for your situation. One of my past clients, his name was Darlington. He came to me and said, Julian, look, I'm looking to be able to get $50,000. I heard about the 0% interest business credit. I need that for my construction projects that are going out in Atlanta right now. So I said, okay, cool. I might be able to help out. So we looked at his credit report. We saw that there were some late payments, some inquiries. So what we did is we reversed those late payments. We got those inquiries deleted in probably about 3 to 4 months. After we cleaned up his credit report, we analyzed his business entity. Everything was straight. And then we came up with a customized funding sequence based on his credit profile, based on his previous banking relationships, to be able to help him get approved for over $70,000 within 2 weeks. All with 0% interest business credit. And now to be specific, with that $74,000 in 0% interest funding, he was able to liquidate the cash off the cards and be able to invest in his deals. And some of the things he used that funding for is to buy out a partner on a bad partnership and fixing his terrible roof on one of his properties. So look, I could sit here and talk strategy all day, but I really want you to see what this actually looks like in real life. Now, you could take everything I covered today, the entity setup and the stacking strategy, and try to piecemeal it and try to figure it out on your own. Or if you're serious about getting access to the capital your business deserves, go ahead and click the link in the description, Fill out the form and book a free funding strategy call that's customized to you. We've helped clients get approved for $50,000, $70,000, 100, 180, over $240,000 in funding without tax documents, without bank statements, and without hurting their personal credit. And we can do the same for you. And if you found this video helpful, look, don't stop here. Watch this next video where I helped a client get approved for over $240,000 in funding with under 4 hard inquiries without having to show any tax docs, without having to show any bank statements. Click somewhere around this video and I'm gonna see you on the next one.